um actually Forex trading. The title is Simple, Fundamental, and Technical Analysis Techniques for Forex Trading. This is Jeremy Fu, your presenter for today. We'll be starting the session proper at about 7:02 p.m. Let's give some time for our friends to join us. Meanwhile, enjoy your dinner and we'll speak to you real soon. If you actually can hear me, actually be a good time to do a quick sound check. If you can hear me, just type yes into the question box. And also during the webinar, if you have any questions, do type them into the question box and I'll address them during the Q&A session at the end of the webinar. Thank you. Hi, and a very good evening to everybody. Thank you for joining us for our live webinar tonight on a few basic simple fundamental and technical analysis techniques for Forex trading. This is Jeremy Fu. I'm an account executive with Phillip Futures. In today's webinar, we'll be discussing a few basic fundamental and technical technique strategies to better your Forex trading. Those that join a little bit later, I would like to do a sound check. If you can hear me loud and clear, just type yes into the question box. And also during the webinar, if you have any questions, do type them into the question box and I will address them during the Q&A session at the end of the webinar. If everyone can hear me, I'll just like to begin tonight's webinar. So yep, my name is Jeremy Fu, account executive with Phillip Futures. And tonight I'll be sharing a little bit on some simple fundamental and technical analysis techniques for your Forex trading. So first and foremost, obviously a short disclaimer. So all the information here shared is basically for educational purposes and shouldn't be used as any recommendations for trades. So a little bit about me before we actually get started. I'm actually a licensed MES representative, also known as a trading representative, broker, remisier. They're all about the same. So all about the same if you know it from different terms. I've conducted a few seminars. That was pre-COVID time, and then since then we have moved to online, where it's virtual, where it's all about webinars. So since then, I've actually conducted a few webinars as well. Not sure if you heard a few of my webinars um, before this on FX trading and futures trading as well. So what I actually specialize in would be Forex trading, futures trading. We also have a few options on our futures products, CFD, which is the contract for difference products, which we have recently launched at the end of last year. And also a few things that I offer is actually helping clients fine tune your trading strategy. As well as for me, I find it's quite important to understand why the market moves in a certain way, or what actually happened that caused the market movement. And I feel that if you better understand that, then you actually can better your trading. So a few things that we'll be running through today. Um, I'm gonna just do a quick Forex run through. A few basics that you might want to take note of. Some simple fundamental analysis techniques, some simple technical analysis techniques, a short market outlook for the week, as well as a little bit on what to expect in the recent, maybe the next 2 weeks or so, as well as how you can get started trading on our MT5 platform. So just a quick Forex run through. Forex actually stands for foreign currency exchange. So therefore trading one currency against the other. We have about 40 FX pairs to choose from, ranging from the major pairs against the US dollar to the weird crosses like Euro Yen, Euro Pound, Pound Yen. So yeah, definitely have more than enough pairs for your trading needs. Uh, so the FX market runs 24 hours, 5 days a week. So currently, because of the US daylight saving, the market opens at Monday 6 a.m. to Saturday 6 a.m. It'll be moved back to 5 a.m. once the US daylight saving adjusts back accordingly. Um, the margin is for FX trading is 5%. This is the MES regulation. So any local licensed broker in Singapore, you have to follow the MES regulation of 5%. So for a regular lot of 100,000, the margin is about US dollars 5,000, about 5K. So that's the amount of money you must have in your account in order to open that position. So the leverage we actually offer is 20 times based on 100K lot size divided by the 5,000 margin. That's how you get the 20 times leverage. And that's how you actually get the 5% as well. So the per pip value of price movement depends on the volume traded. Obviously, the larger the volume, the larger your per pip value or profit and loss. And it works the other way as well. If you're trading a smaller volume or a smaller size, then your per pip value of the price movement decreases as well. The swaps and interest charges applied. This is actually the interest differential between the currency pairs that you're trading. So obviously you'll be in profit if the market moves up from your buy price. Similarly, you will also be in profit if the market moves down from your sell price. So with FX trading, you actually can do buy direction. You actually can hold buy and sell positions simultaneously, as well as going the other way as well. So you actually can short sell without actually owning any of the currency, similar to stocks. So yeah, if you haven't checked it out, you want to know a little bit more on FX trading. There's actually two webinars on FX trading that I have done, available on our YouTube channel, Phillip Futures. Just type Phillip Futures or type the um, title that you see above, and the video should come up, and then you can actually watch it if you if you want to know a little bit more on FX trading, or if you want to call to have a chat with me, either face to face or Zoom. Yep, go ahead. My contact number is, I will just reveal that at the end. So just go ahead with that. So actually just get started on what is fundamental analysis. So fundamental analysis is actually the analysis of economic, social, and political factors that affect currency prices. On a day-to-day basis, we look at economic data reports and news headlines. Similar to any economy, currency exchange rates are mainly driven by demand and supply. So these economic fundamentals drive the country's currency in the long and short term. So if you look at the picture, a good economy basically means a higher currency value, and for a bad economy, it basically shows a lower currency value. So a good economy would equals higher currency value, a bad economy would equals lower currency value. So I just used the euro dollar in an example of how the exchange rate actually moves. So if you look at the up and down arrow, we'll be looking at appreciating versus depreciating. So if let's say the euro economy is appreciating against the US dollars and the US dollar is depreciating, therefore the exchange rate would increase. Similarly, if the euro economy is depreciating and the US economy is appreciating, then the exchange rate will decrease. If in the case where both economies are depreciating, the economy that is depreciating at a faster rate or a larger rate then would affect. So if the euro dollar is depreciating more than the US economy, then the overall exchange rate decreases. This is similar. Would be a total reverse for if the US dollar is in front. So like the pairs like the US dollar against the Japanese yen, then it'll be a reverse. The whole thing will be actually reversed. So economic events and data reports. So these are actually the measurements for evaluating the health of an economy by looking at consumer spending, and this would lead to central bank intervention if there is, a large drop in, if the economy is in trouble and the central bank needs to take charge and to do something to help boost the economy, or if the economy is expanding too fast, leading to a large inflation rate, therefore they need to push the inflation rate down to help the economy not grow or expand at such a rapid rate. So some of the events that you might hear about, or maybe you've seen before and you might want to take note of, would be interest rate decision. This would be by the each country's central bank, as well as the central bank speakers. When they do speak up on the economy, it does affect the currency. And then you would hear for US, you would hear a non-farm payroll. That is the jobs data report. Inflation rates, gross domestic product or GDP, retail sales, and ISM reports, if you heard of it. Then the other things are like producer price index, PPI, consumer price index, CPI. Some of these things you might have heard of. These are all economic data that evaluates the health of an economy and see how well the economy is actually doing. And investors use this data to see how good the economy is doing, and therefore that will actually in turn help affect currency rates. So the economic data reports compares previous, forecasted, and actual data of a certain currency against its base or counterpair. So if let's say you're trading the dollar yen, it'll be the US dollar against the yen. And basically what you want to do is you trade on a probability based on the data provided by the analyst. Analysts will actually come up with a forecasted data, and then you can actually use that forecast against the previous to see, is the economy, since the last data release, has the economy been growing, or has it been shrinking, has it been depreciating, or yeah, and then that would in turn affect currency rates. So how do you actually trade during the economic event? So this is the important part. So what you want to do is actually evaluate the economic event or the data report. So you compare the previous with the forecasted data. Will the data affect the currency positively or negatively? Let's say for the NFP, which is the job data, if they're going to show that the forecasted is less than the previous data, which means that the currency, the economy is not doing well. The currency is not good. It's all a snowball effect. So first, you want to decide if you think that it's going to affect the currency positively or negatively, so that you have a clear mind on placing your trades. Is the currency going to go down based on the information that you have, or is it going to move up? Therefore, the currency is going to go up. So if you think the currency will react positively to the release, look for buying opportunities before or after the event. So let's say, for example, if the job report's supposed to come up, I'll just give an example later. So maybe we'll just put all this into perspective. So accommodate for markets pricing in pre-economic event or data releases, the efficient market theory. If you don't know about that, that's actually that all prices reflect the event that's going to occur. So if you think that the report's going to come out at 9:30, and at 9:31, if you place your trades, is that going to help you? Probably not, because by the time you get the news, or when the news gets released, the market has already reacted to that. And so you need to accommodate for the pre-pricing in, which maybe could be hours or days. So expect volatility and pricing in few hours or days before and after, depending on the scale of the event. So obviously, for the monthly job data report, which is the NFP, maybe you might see pricing in a few hours before. But of a large scale event like recently we had the US presidential elections, we saw pricing in weeks before, and leading up to that, we saw the markets reacting very um, strongly. We saw large volatility, even before they announced the actual winner, which was Biden. So yeah, you need to, if it's a large scale event, that could be even days or weeks before the event occurs. So take note for that. So some of the trade setup you might have for NFP. So I just did this on the euro dollar. This is the hour chart, and actually just pinpoint exactly when the NFP event actually occurred. So this was actually the job data for earlier this month. The next one would be in January next year. The NFP report is every first Friday of every month. So next one will be in January. So markets were pricing in a not so bad non-farm payroll, but came in weaker than expected. So, and then investors took the weak NFP as optimism for further monetary stimulus, basically the pumping of money back into the US economy. So you can see from the chart here, you can actually draw a nice resistance line right at the top, and right when you see the job data came in weaker, as expected, we saw the the we saw the US dollar actually, it went down instead. because as I said, it's a snowball effect. So you can see the job data decrease equals to the country economy decrease equals to the currency value decrease. So the monetary stimulus equals to printing more money equals to money supply increasing, therefore the currency value decreases. So yeah, we can actually see that. So like I said, it's a snowball effect right around. So the monetary stimulus helps equities rally because more money equals to more consumer spending equals to business revenues increases. So generally, a weak NFP would weaken the US dollar, same for any other economic event or data, pre-pricing in, and then a weaker US dollar after the release. So a little bit on what is technical analysis. So technical analysis actually is based on the fact that history tends to repeat itself. So this is the analysis of price movement using historical price movements to predict current and potential price movements. So this is using the past to predict the future. So TA, which is technical analysis, identifies historical chart patterns from the past to determine probabilities of future price direction or movement. So technical analysis is not so much a prediction, it's about probability. So if you haven't heard, some people like to use the candlestick. So basically the candlestick, you can see over here, it's actually very clear to show the open, close, high, and low for the day. And that will be the open and close would be the candlestick body, and then the high and low would be the lines that you see. So obviously you can't get that kind of information similar to maybe a line chart. A line chart will actually just show you the average price for that time frame. So with the candlestick, you actually get a lot more information. So a lot of people prefer the candlestick. So once you know how to look at the basic chart patterns, you can then add indicators to increase the probabilities on your trades. So fundamental analysis helps you to plan your trade, while technical analysis helps you time your trades with precise entry and exit points. Just go through a little bit. So trading using technical analysis. So for me, the number one important thing when you want to look at the chart, always identify the trend. At any point in time, for any currency pair, any product that you're trading, any counter, it's either in one of these three trends, either an uptrend, downtrend, or a sideways trend. Any point in time, it'll be any one of these three. So look for what trend it is doing, either up, down, or sideways. So once you identify the trend, it's actually much easier to execute your trades. Different trends on different time frames and a different time frame of your trades. So what that means is that for maybe a different time frame, it could show a different trend, but so obviously lower time frames might not give you a full picture. But if you look at the higher time frames like the 4-hour, daily, or weekly chart, it actually shows you the overall trend, while the lower time frames actually just captures more of the market fluctuations. So what you want to do is look at the higher time frame to identify the general trend or the overall trend, and then look at the smaller time frames to actually time your trades. So I just used the euro dollar for example. This was from last week. If you see the date, 9 December. So in a downtrend, look for more selling opportunities until the channel is broken. So I just put some arrows there. You can see good places to start selling. Very nice here, and then it bounced off the lower trend channel over there. So for this one, for the week 6 days, you had a few good opportunities to sell. After that, you can see right now, right when it touched the upper portion of the trend channel, actually came down. The pair came down quite nicely. And yep, if you actually wave your mouse onto the MT5 platform, onto the upper portion of the trend channel, they give you some levels to which you can sell. So this level was about 2108, and then afterwards it came down slightly from there. This was where the sell came from. So that was a downtrend. This is the Aussie dollar daily chart. you can see that there was an uptrend from June. It was a uptrend for a while, and then after it broke, it ran out of steam or momentum, if you call it, and it actually went into a sideways trend for a short while. So if you can see the arrows here, will be a good place to buy. Here also good place to buy. Here good place to buy. Here good place to buy. You actually, and then you can say, would you advise selling? So actually I drew a range arrow here, double-sided arrow. You actually, if you chose to sell around this portion, what I don't like about trading against the trend, if you're doing short-term trades, that's no problem. But what I don't like is that when you have a range here and you start to sell against the trend, your risk to reward is actually rather small. If you can see, probably it's only about here, given that if it came down. In this case, it didn't actually come down. So, and then you might get stopped out slightly after you maybe sold. When it starts to pick up, you might have hit your SL shortly after. You might be in profit slightly, and then afterwards you might have hit your SL. So that's what I don't like. The risk to reward is not really there. Whilst if you were trading with the trend, you actually have unlimited profits in that case if you get a good price to buy until the trend is broken. So if it continued, then obviously your profits can be keep rolling. So in that sense, it broke the uptrend channel here, and then it went to a sideways trend for a while. So you actually could then afterwards we pick up from using the trend channel to using support and resistance lines. So the upper line here would be your resistance, and then here would be your support. So here a good place to buy, and then here a good place to sell. So here a good place to buy as well. And then yep, if you did a sell here, a little bit unlucky, so no choice. Just cut losses, because after that it started to trend up again. And then yep, you can see the double-sided arrow is if you sold here, you might be slightly in profit before maybe you got stopped out after it started to move away quickly from the resistance, and then afterwards straightly all the way up. So if you didn't know what was support and resistance, it's a good parallel lines to each other, that straight lines, horizontal lines that you can use during sideways trending markets. So obviously here you can see here good places to sell, and then you can sell all the way down to where the support is. Here would be a good buy, and then after that go all the way up. You can flip to a sell, and then you can do this until it breaks either the support or the resistance line, and then afterwards the theory is that the resistance once broken will be flipped, and this will be the support for future future support in the once it starts trending upwards. And then afterwards maybe you can start drawing your uptrend channels and to look for good levels as well. So with this, obviously you can determine good entry and exit places, as well as where you should take profit and where you actually should put your stop loss. Maybe your stop loss can be somewhere below the support level. If you did a buy here, or maybe somewhere here, you can put your SL slightly below the support level. So just you don't want a case where it dips down, just hits your SL and then bounces back up. That's what you want to try to avoid. So this is identifying the trend. So if you can see, this is the Dow Jones CFD, which is on the MT5. This was last week's chart, so you can see it trending upwards as well. So generally in an uptrend, the price makes higher highs or higher lows. If you can see, you suddenly see this kind of chart pattern where you see the highs are actually getting higher, then this is a sign that it's an uptrend. Or if you see the lows are actually getting even higher, like you can see the arrows in that point, then you can actually start to identify that this is an uptrend. So in a downtrend, it will be the other way. The price makes lower highs or lower lows. If you can just picture that, during my demo, I actually show you some of the downtrends. So if you start to see the highs are getting even lower or the lows are getting even lower, then it's a clear sign that it's in a downtrend. So know where are your major support and resistances, or what I like to call it are the lows, which I like to call them floors, and where are your highs, which are the ceilings. So obviously here Dow Jones, this is the 4-hour chart. You can actually draw quite a nice uptrend channel that's actually happening. So you actually can see a good places to buy are where the arrows are, and after that it moved right up from there. So you have good places. So yeah, and then after you identify the trend, or you identify your major support and resistances, then you can add your indicators, maybe your moving average or Bollinger Band, stochastic, RSI, Fibonacci, MACD, all these indicators. If you've heard before, famous indicators that many of the analysts use for technical analysis. If we can't have a scenario where I cover, there's just too many indicators. If we cover all the indicators, it'll take hours, to cover. There are countless indicators. So what you actually can do is actually maybe identify a product or currency pair that you are interested in, and then I actually can provide some recommendations for indicators for that pair. Or if you have an indicator that you are particularly interested in, maybe you are interested in the moving average, the RSI. You have heard that is very good for predicting price movement. Then actually can zoom in with you, either one-to-one, to see which, using the indicator for that specific pair that you would like to go into. Otherwise, Google or YouTube has fantastic videos, articles about all the different kind of indicators that you might be interested in. And, just the more indicators you have, it's going to be more beneficial for you, because that just increases your probability on your trade. So, yep, you can see they use indicators to increase the probability on your trades. More buy or sell signals equals to more probability of a successful trade, because you get more trade confirmation. If maybe you have 5 indicators, 3 of them are showing a buy signal, 2 of them are showing a sell signal, then you only increase your probability from there. If you only use one indicator and if it goes south from you, then obviously not. Or if you have 2 indicators, then it's a 50-50, one buy, one sell signal, then it's a 50-50 probability. So what you want to do is you have more indicators, then it increases the probability of trades. But don't um, don't crowd your chart so that you have too many indicators and therefore after that you get confused. So that's not what you want to do also. So keep to the few indicators that you like. And then for me, use simple patterns to identify uptrend, downtrend, where your support, where's your resistances. What's happening with the news, is are they releasing some news coming up, and how's that going to affect the currency? So and then after that, if you have the time, read more analyst articles. More analysts, more people saying that it's going to go up, it's probably going to go up. More people saying it's going to go down, it's probably going to go down, and therefore only increase your probability. It's only beneficial for you. So I'm just going to do a short MT5 demo, just this moment, to show you how actually on our MT5 platform, how to do your lines, as well as some simple ones. So I just use the euro dollar for an example. So yep, I've actually drawn some of the trend lines here, our chart. So this is actually good levels for you. So it was down here. This was the one that I did the screenshot on the presentation. It broke out from here, and then afterwards it was trending up. So once you draw channels, you actually can see good place to buy here, and then buy here. And if you want, you could do for a short sell and maybe a short intraday sell here, and maybe here. So what I would actually like to show you is actually the how you actually can determine the trend on a larger time frame. So if I go out onto the daily time frame for the euro dollar, you can see that it was actually sideways trend a long time before breaking out of the major level, which is around 1.20 level here. And then what I want to show you is actually, if you go to the weekly chart, some of the key levels to look out for would be the 1.20, as well as if it breaks the 1.22 level, it will actually might make a strong movement towards what it is, the 1.250 level, which is the level here, which in 7 it hit 1.2550, and after that it made a long trend down. So what I mean by where are your flaws, so this would be the ceiling, this will be your source, which is the high. So very, very strong selling if let's say it makes a correction towards it breaks the 1.22 level, it might make a it will put a retrospect, very likely going to test the 1 level, and towards there you can start buying towards 1.25, and then afterwards you can consider very, very strong sells at the 1.2550 level. So that will be the ceiling. Flaws, what I like to call as flaws, would be here. This would be your major support one here, the next one would be here. This is a long-term view, of course, but obviously what I want to show is actually going on to the larger time frame. You actually can identify what is the overall trend, and how is actually the market, the pair trending. So obviously the euro dollar, if it breaks 1.22 level, it might very, very quickly move very, very quickly to 1.25. Then that's the next level to watch out for. The next one, gold, which is the XAU. I actually just can draw very nicely. Here, this will be the daily chart. So I'll just show you quickly. You draw your upper trend channel, and then you can draw your lower trend channel here. So obviously on the daily chart, you can see the price movement recently in the gold. Here was, I thought there was some view that it might do a rebound, but it didn't. So that was and the confirmation on the bearish movement last week confirms that it's still in a long downtrend channel, at least for for the last second quarter half of this year. And so obviously if you identify, then you can look for, in a downtrend, look for good selling opportunities towards this upper trend channel, which is what you can see here. So from then you can then plot your indicators. So you can insert indicators, then you can add your moving averages. For me, I like the 50 and 20 moving average, so you can just do that. And then you can add other things, like if you like RSI, you can add that. You can add your indicators from there, which is going to give you better probability of trade. What is the RSI telling you? What is the stochastic telling you? That you can see from here. It only better helps you increase your probability on the trade. Another one, you can see dollar yen. What you can see, on the daily chart, it's been in a long downtrend, and it seems to have not been able to find a way out of it since the second half of the year as well. Long downtrend for the dollar yen pair. So if you show it here, this would roughly be your ceiling, and this would be the floor. It showed that it might all go down, or it might go all the way down to 101, but next global one is probably somewhere around here, which after that it touched 101. After that it made a very, very big recovery all the way back up to the 1.10 level. So yep, obviously dollar yen looks like it's not trending too well. and we're just looking for good opportunities to start selling in a long downtrend. The other one, the last one I want to do would be the Dow Jones, US tech, US stocks being the hot for now. So yep, you can see, you can draw your channels. It works exactly the same. Great levels you can see here. This is live date price feed, of course, 30,000. So what I draw the line here, the yellow, is actually, this is where the first support is. So it actually touched last, and then it bounced off from the 229,700 level, bounce up from there. So this would be first support where you can continue buying, as well as here. So obviously US indexes hitting new record highs, so definitely still very bullish on the indexes as well. So I'll just go back to the presentation where I start on the short market outlook. So what actually is ahead for the US markets and US dollar? So if you didn't already know, the US stimulus bill, which is basically the Federal Reserve printing more money to pump back to help the US economy, which is not doing too well because of the coronavirus. So the approval, which was scheduled for 11 December last week, has actually been postponed to the end of this week, which is 18 December. So we're going to look for that, whether it's a 900 billion stimulus package deal. So if that is approved, and money, printed money, is given to the American economy, obviously that's gonna help the US equities, or to rise, and it's going to probably weaken the US dollar in the short term. So should it be rolled out, which is quite expected that it will, it should help the US equities rally and weaken the US dollar in the short term due to the increase of the money supply. So the next one would be, what of your focus would be the US FDA actually approves of the Pfizer's COVID-19 vaccine. So the if the markets have already priced in, has already reacted to obviously the US presidential elections. So if a vaccine actually comes up, it's gonna probably rally even more the equities. So that is actually unfortunate for the US dollar. So that actually leads to more weaknesses lies ahead for the US dollar, as a US stimulus bill and a successful vaccine would help US equities rally, weakening the proposed safe haven dollar. So during the COVID period, when COVID actually hit quite hard in March or in April earlier this year, we actually saw the US equities take a huge dip, and then there was a shoot up in US dollar, basically due to the fact that people saw US dollar as a safe haven, that cash is basically king, based on that logic. So what actually lies ahead for the other major pairs? So yep, like I covered on the euro has been on a strong gain recently, breaking the 1.20 level, ran into some resistance towards that 1.22 level. So the key point will be if the pair can break and hold above the 1.22 level, which would bring the next 1.25 resistance into play. So for the pound, obviously Brexit negotiations, which were supposed to end over the last weekend, has been extended tentatively until 31st December. So we saw the pound gap up on Monday morning, on the 14th, yesterday, on the extension, which is technically good for the UK, as it slightly avoids a hard Brexit or a no-deal Brexit for now, which investors took it as a good sign for the pound, and we saw that reaction. It's been pretty choppy recently, so we just want to see. We probably in the next 2 weeks, as we get nearer to a deadline, tentative deadline, we can see some pretty choppy price movements within the GBP in the probably 1.30 levels to maybe even 1.4 maybe. For the yen, Japan rolled out stimulus last week. We saw the yen weaken slightly due to the money supply, obviously. So some key technical levels to watch would be the 103.00 and 105.00 for the dollar yen. Lastly would be the Australian dollar against the US dollar. So actually Australia sprang well above other currencies with its management of the pandemic, and we see that strength in the recovery of its economy and currency. So for me, more upside is expected. It might test. It looks pretty strong and poised to break the 0.76 level. Looks pretty good for the Aussie dollar. So how can I help you? Maybe every day you are thinking, should I buy or sell? Which direction is it gonna move? So usually I tend to see that a lot of reports, from online sources, they actually tell you, euro dollar, dollar yen fell by 1% last night, or if it fell by 80%, 80 pips, for example, it only helps to a certain extent. uh, I can always check prices on my own to see the rise and drop in the prices. What is actually crucial is actually predicting how the price would move today or the next few days so that I can place my probable winning trades. So I provide my view covering the major pairs, which I'll show you later, which is actually a market report that I sent out, and it actually shows predictions for the day and key technical levels to look out for every single day. So I send every single day, and it's a 24-hour view of what's expected for the currency pair for that day. In that market report, there's also news updates and upcoming news events that could affect prices. So obviously, this is available for clients that are actively trading with me, and this will be readily available for you as well. So yep, like I covered earlier on, the first portion you see here is actually economic data table. My next slide, you'll be able to see one. I'll also tell you whether the markets are going to be quiet or is it going to be active. What is it, a holiday? Is there a big event coming up? So my report mainly covers the major pairs, so euro dollar, pound dollar, dollar yen, Aussie dollar, US index, Dow, S&P, gold, as well as crude oil. These are basically the more popular products that my clients are trading, and obviously if you open an account with us and you're a client under me, you'll be receiving this as well. Lastly, there will also be an event notification for what's the events happening for the day itself, and show you the previous and forecasted data. So lastly, usually for big events like the presidential elections, or if there's a non-farm payroll coming up, I actually give a prediction. Now you can read over there. So I actually said the last two NFPs have been overshadowed by the US elections. So it might be a little bit tricky this time. This was the earlier this month, the December release of the job report. So some predictions of what might happen on the US equity side, as well as what will happen for the US dollar. So yep, obviously this is going to be readily available for you. If you become a client with us and have your own account under me. So this is actually the economic data table, summarizing the important events that are occurring for the week. This is actually the one for this week, so you actually can show like there's OPEC meeting tomorrow, which is affecting crude oil. We have retail sales data tomorrow as well as the Fed interest rate decision, which is the US central bank. They're going to reveal whether, so no surprises expected. They're expected to keep rates at 0.25, but what would be of interest would be the press conference later after the release of the interest rate, that whether they were going to comment on the US stimulus and what does it look like for its approval. Obviously, if it's approved, US equities are going to rally, and US dollar, it's probably going to take a short decline after the reveal of that announcement. We also have BOE, which is the Bank of England. They're having interest rate decision. And then lastly, on Friday, we have the Bank of Japan, which will be releasing its interest rate decision. So this week's actually pretty busy. It's probably going to be the last busy week before the economic data sort of quietened down for the last 2 weeks of December with all the holidays, Christmas, New Year. So this is actually the last busy week before we start to tone down a little bit on economic events, and then after that we look for January when the new year starts again. So some of the keeping up with news and analysis, if it interests you, these are a few that I use, which are all free except for Bloomberg. Bloomberg gives you a few. If I'm not wrong, it's 5 free articles per month. After that, you need to pay. Um, so yep, some of this stuff are like Daily FX, FX Street, Forex Factory is basically for economic events. Investing.com has very good analysis, as well as Market Watch. All these are free. For you, CNBC highlights news as well. So yeah, if you're interested, take a look at some of these websites. They're pretty good and they're all free. So yeah, with leverage products, I have to just highlight some of the risk management portion of it. So whenever you're trading, always have a stop loss. This is number one most important. um Losses are part and parcel of trading. It's better to take a small loss now than a big loss in the future. So without a stop loss, you could actually wipe out most of your account. We don't actually emphasize, or we don't actually force clients to put a stop loss. So basically, your open position or your trade would only close when you run out of money in your account. So that's obviously very dangerous. So obviously have a stop loss at all times, so that you can know when to cut losses and plan for your next trade. So do not move your stop loss to prevent realized losses, or even remove your stop loss. Yep, please don't do that. If you think about it, you could have been stopped out, flipped in the direction of the price moving in whichever way, and you could have been profitable. So do not focus only on the entry and take profit, but you focus on a stop loss level as well. So number one reason why most people aren't profitable is because they take profits too early and they cut loss too late. So have a good trading discipline, and then this can actually be a long-term investment for you, which actually it can be profitable in the long run. So how can you actually get started? So what I like to do is actually get started on the demo platform. That's why I say this is actually just to familiarize yourself with the platform, how to enter, exit trades, just a platform familiarization. And then after that, you can actually start to open an account with us. It's free. You can do it online. Yep, you can do it online, and then afterwards it's actually getting started on a live account. Maybe you can start trading on a small volume first, and that actually practices your proper risk management, putting a stop loss on each of your trades. That you I've seen many people that are trading on the demo and they definitely don't put a stop loss, mainly because it's not real money. So once it's your real money, you actually put more thought into it, put more, yeah. So after that, incorporating simple fundamental and technical analysis into your trades. Like I said, identifying the trend, drawing your support and resistance lines, and then after that, we can actually take a look, adding indicators, adding your moving average, adding your RSI, and then how do we use that? How do we use the RSI or moving average to identify good chart patterns or give good buy or sell signals from then on? Yep. So please don't think of this as a quick get rich scheme. Can you start with 500 and becomes 5,000? Probably not. That might be a little bit hard, but obviously not impossible. If you are very good at trading, which maybe you might happen to be, maybe it's very possible. It's not impossible. But if let's say you were thinking of investing some of your money, maybe you had 500, and if you turn your account 10 to 20% in a year, you'll probably think that's a pretty good investment. Rather than the interest rate that's giving you in the bank 1 to 2%. So yep, maybe you can actually diversify some of your assets into some more risky products like FX or futures trading, which you might be profitable. So obviously trade with money you have, not money you need. And if FX is not the market for you, we can always explore into other financial products that might suit your trading style or your risk appetite. We do have a large range of products, and maybe some might be more suitable for you if FX is not the one. So some of the things to consider, obviously know and understand the product you're trading, choosing the right broker where your funds are safe at all times, easy when depositing and withdrawing of funds. You don't want a broker that when you want to withdraw, it takes very long for the withdrawal. That's obviously not ideal. You want a broker or company that is contactable with ample support, obviously reliable and stable platform, MES regulated, and obviously lastly, understanding the risks and developing a trading strategy suited for you. So with that said, why should you actually choose Phillip Futures? Okay, so Phillip Futures is actually one of the few brokers that actually has a one-to-one broker service. If you know a lot of the new online brokers, they don't actually have this kind of one-to-one broker service. So each of our trading account is actually assigned to a designated broker for servicing, and you don't actually have to pay extra for this. The same commission rates apply. If let's say you're trading on MT5, there's 0% commission. We don't actually charge you anything above the spread, so to say, and we don't charge any commission for this extra service. Our general hotline is open from Monday to Friday, 9 a.m. to 6 p.m. Don't want to name any names, but some of the brokers, if you call, their hotline is basically like calling the bank. You never get you need long waiting hours to get your call heard. So if you don't believe us, the number is there. You can give a call tomorrow. Someone should pick up the phone, within like maybe the longest like a minute. But yeah, you can give it a try. Someone will pick up the phone. It's actually very accessible. And the other thing is that we actually have a 24 hours IT desk hotline available for any platform issues, Monday to Friday, 24 hours. So any platform issues, you can give them a call. If you do not believe, you can actually give a call later on or later in the night. Someone should pick up the phone. As well as if let's say our platform or server is down for some very strange reason, and usually it's very, very rare, you actually can call into the dealing desk, which is 24 hours, and they will take your call in trades. The other thing, which is I think we're actually doing quite well, is actually funds deposited are received and credited into your trading hours within the hour. So with email receipt or confirmation by email. So 24 hours, 5 days a week, deposit funds, they should credit into your account within the hour. Should everything in your transaction be done well, indication of account number and all that. We also have a same day withdrawal and transfer of funds. So if you submit before 9 a.m., we actually transfer you the funds within the same day. The last few ones, we actually have a trading account statement sent by email daily. So if you have any trades done the previous day, any of your open positions, account balance, as well as commission charges for the previous day. And then obviously we have no additional charges if we don't do any trading, and we don't hide any hidden charges that we'll actually be charging to you. So these are actually a list of things that I think we're actually doing pretty well, and a few of the characteristics that sets us apart from some of the other local brokers that maybe you might be familiar with, and maybe these are some of the pros that might be attractive to you when or important to you when you're trading. So yep, obviously you can open an account within minutes almost now. Within the home, probably the whole account application should take you 5 to 10 minutes at the most. If you're using your SingPass, the only document that you need would be your bank statement. And then for foreigners, obviously you need a copy or submission of your passport, or supporting documents for your mailing or residential addresses in your respective countries. But it should be all pretty straightforward and quite easy for you to open an account. Obviously, so the online account opening, you can scan the QR code here to open an account if you like. If you like to get started trading. Otherwise, another QR code would be at the end of the session during the Q&A. You actually can open the account there if you like. So if let's say you just went into our website, do indicate your name, my name, which is Jeremy Fu, on the third page of the application, which will actually tag your account to me. Otherwise, if you don't do that, then your account might be auto assigned to a different broker. So use the QR code for account opening. That will automatically tag. That'll be the best way. Otherwise, do indicate my name and do inform me once you have submitted the application, so I actually can follow up with you if there's any necessary follow up. So yeah, drop me a text or drop me a call. I'll share my mobile number at the end. Yep. Yep. Okay, we're almost at the end. So yep. That's my mobile number. My office number if you want to call me, but obviously mobile's better. Or you can drop me an email. My email address is there. Um, Otherwise, if you want to come down and meet me, maybe we can meet at our office. Our office is at North Bridge Road, Raffles City Tower, on top of Raffles City Shopping Center, which is on the City Hall MRT. So a few of the services that I provide are obviously daily news updates, all by WhatsApp, the weekly economic data table, daily technical views, advice on trades. Obviously, I give free one-to-one coaching for my clients, either face-to-face or now we can actually do it through Zoom, which is actually pretty good also. We can do a platform demonstration and all that, run through a few things also through Zoom, very interactive. And I'm contactable even after office hours if you want to give me a call. Might not reply as fast, or maybe if I miss your call, I'll definitely call you back. Maybe a few hours later or a few minutes later, depending on when I check my phone. So besides me, company actually does provide advice for you. For FX trading, obviously we have this portal called Trading Central. It's a research portal. So yep, they will actually send. It's either available on email or on the MT5 platform as well. They give analysis of 30 different products, intraday, short, midterm views, as well as what levels to look out for as well. Besides that, we have a daily commentary, which basically covers the commodities. So crude oil and gold, they actually send reports every single day, levels to look out for, fundamental news, what to look out for as well, and what lies ahead for the commodity products. Lastly, we have this tool called the Auto Chartist, which is available on the MT5 desktop. It's an application or a tool that you can include into your chart, gives you some chart patterns, identify some levels. Otherwise, if you prefer to receive the email version, you can see on the left, it's the email version. It's a report they will send 3 times a day, one in the morning, afternoon, and then at night, identifying some of the pairs that they feel are maybe trending up, trending down, what to look out for, descending triangle, some of the chart patterns to look out for. So obviously we still have refer a friend. If you refer a friend, receive $88 referral fee. If your referee trades within one lot within 1 month from the account activation date. So besides FX trading, we do have a large number of CFD products that we actually recently launched, which are gaining very, very popular. So we have the 13 different indexes. Yep, you can just take a look there. Dow Jones, Nasdaq, A50, SG index. Yep, the ones that you might be interested in. We have 80 popular US shares. Google, Amazon, Apple, Microsoft, all these ones. 33 popular SG shares. We got a few REITs, ComfortDelGro, SATS, SIA, DBS, obviously, popular shares, as well as recently also we launched 4 cryptocurrencies. So like Bitcoin, Litecoin, Ripple, and Ethereum. So obviously all this on MT5, 0% commission platform, free live data price feeds. Yep, obviously MT5 comes with great charting software similar to MT4. Charting is great. And obviously we are adding more and more CFD products along the way onto our MT5 platform. So besides that, we also have futures trading, which is on a different platform, which is on our Phillip Nova platform. So obviously this covers our financial futures, such as currency futures, index futures. Obviously, with futures trading, it's on a centralized exchange. So yeah, maybe that's good for you. Otherwise, commodity trading, like crude oil, gold, we also have futures trading for those as well. Contact me if you're interested in maybe getting started on some futures products. Yep, so actually we've come to the end of the webinar. I'll just do some Q&A for a few minutes. So I'll answer some of your questions. The QR code there if you'd like to open an account. Otherwise, you can take down my contact details. Maybe you want to drop me a text after this webinar. Um, or if you want to give me a call, get in touch, have a chat to what Phillip Futures can offer you and how can we assist to help your trading. Yep, and maybe if you want to get started, you want to learn, obviously, yep, I can help you as well, how to get started, what products to start out as a beginner. Or maybe you just want to fine tune your strategy. You've been trading some pairs and you've been getting unlucky. How can we help you? How can I help you better make profitable trades on that? Okay, just let me just take a look at the Q&A. Okay, so we have one question. How can we access to your past webinars? So actually my webinars are actually uploaded to our company website, or the easier one would be our Phillip Futures YouTube channel. So you just type in Phillip Futures, look for our YouTube channel. A list of all the webinars are there. Otherwise, if you just want to watch specific to my own webinars, then yeah, contact me. I can send you the link lah. Otherwise, I'll show you which ones are the ones I've done before. We have another question. Is spot forex or futures better? Okay, I mean it's a little bit different. Obviously with spot forex, maybe I'll just cover current. If I assume you are actually you're talking about currency futures. So the currency futures, the ones that we offer are mainly the major pairs against the US dollar. Obviously difference in nature between forex and futures. Futures is a dated contract, so there is a expiry date to that contract. While FX, you don't actually have an expiry date. You actually can hold that position for as long as you like. Yeah. Yeah, so that's the main difference. Which one is better? If you want to do some of the crosses, like maybe you want to do euro pound, euro yen, then obviously that is not available on the currency futures. That will be available on your spot FX. Another question. For euro dollar, what is the best indicator? Okay, I don't know. I mean, I can't really comment which one is the best indicator. Obviously, some of the ones that I've read, and the ones that I use would be like the RSI, stochastic, moving average, Bollinger Band. These are the ones also I see many analysts using for euro dollar, and maybe that might be helpful for you. Which indicator is the best? Not too sure. But yeah, these are some of the popular ones that definitely see people using. The other question, can I change my broker? If you have an account with Phillip Futures, you actually can opt to transfer your account. But yeah, do drop me a text and yeah, I can actually get in touch with you to further comment on that. Yeah. Another question, how to download the Trading Central Market Buzz? Okay, so once you actually download our MT5 demo platform or our live platform, if let's say you open an account with us, you actually can look at the Trading Central portion of it, the Trading Central analysis on the news tab, which is on the MT5 platform. Or once you open a live account with us, they will actually send you the Trading Central emails updates by email. So you can actually see that by email. Yeah. Uh, is the market bus is a new plug-in. This is a new okay. The question was the market buzz is a plug-in. This is a new feature. Yes, it's actually a new feature where we plug it into the platform. Last time it was just the updates by email. So we have actually done the plugin by on the platform. So actually that's accessible onto the platform itself. Do I provide signal? Next question. Do you provide signal what and when to trade? Yep. So like I covered, every single day I actually send out what levels I think that the product will be ranging, as well as do I think is today, do I look like you should buy or what you should sell, and actually give a level, buy within this range. Otherwise, maybe look for the next range to start selling. So that is actually, I would think that's a good enough signal of, or indication in that sense, for you to trade. Yep. Okay, we have another question. If I want to trade oil and forex, which platform is better, MT5 or Nova? Okay, so obviously it depends on which, okay, firstly, maybe just the Forex. So obviously Forex would have to be, spot FX would be on MT5 platform. Um, for oil, if let's say you want to do the WTI, which is the one that's, most people trade, that the most popular one, that one would have to be futures. That would be through the Nova. Otherwise, if you want to do the Brent crude, we do have the CFD on MT5. But yeah, Brent crude and crude, WTI crude is slightly different in terms of its nature. So depending on which oil product you want to trade, then obviously there is a designated platform for that. So maybe look into that. See which oil product you're interested in. Obviously, Brent is tracking, international oil prices, while the WTI is actually just a US measurement on the crude oil prices. So basically, US oil markets driving prices. So yeah, see which market you prefer, and then obviously you will know which platform is better, which platform you will need to use to trade that specific product. Maybe just answer a last question. Can we do options on futures? So yes, actually we do have options on futures, um, mainly on the index futures. So it's a little bit different from maybe your understanding of what's stock options are. So in the stock options, you actually possess the option, the stock option to buy the stock at the specific strike price that you have. So obviously with the options on futures, you would have your options will not expire into a stock, but it will expire, or you can exercise it to become a futures position. So a little bit different on stock options. If let's say your understanding on stock options, yeah, is a little bit different. Um, Okay, I think that's probably the amount of time we have for today. Thank you very much for attending my webinar today. Hopefully, it was an insightful one for you. Thank you for being such a wonderful audience. And a link to the recording of this webinar will be made available in our follow-up email tomorrow. So if you need to review the webinar, something you want to rewatch, you can definitely do that as many times as you would like. If you have any query on the webinar or would like to get started, simply reply to our email and we'll get in touch. Otherwise, my contact details are there. Give me a call. Yeah, give me a call, drop me a text if you are interested, or drop me an email if you want to have a chat. on some of the products or platforms that we have. This is Jeremy Fu signing off. Have a good evening ahead, and thank you all.